Okay, thanks, Adinda. Thanks for confirming it. So I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting for this week Asian Session Live Market Analysis. That is today, 17th of November, between 5 and 5:30 GMT. I'll give the forecast for this particular week, 17th to 21st of November, which is derived using my statistical algorithm. Then I'll also give the market reading using the initial lows and the highs noted down by 3:30 GMT and fine-tune the forecast in order to find what is expected to happen in the market. So I'll explain that the strategy you have to follow or the method you have to follow to read the intentions of the players. Then I'll also give the levels in which the currencies are expected to swing in this particular week. Now, before commencing and giving the forecast for the next week, this week, I wanted to recollect what has happened last week. And till Friday, European session, the players were not showing any symptom of Euro and GBP going up. And during start of the US session also, they made a small dip, pretending as if they are going to make a free fall during that of the US session, which would have definitely induced a lot of long holders to liquidate the long positions because they had done very effectively the patient testing game. And after that, they would have trapped or they would have cut hold of many of the short sellers in Euro and GBP and also in other currency pairs. And what had happened then US session, without having much of an economic trigger, they simply gained the levels in the case of Euro and GBP. And that is what they are expected to do because they create the market sentiment and act against it of the traders. So we have to always keep in mind that when they drop, it is not the weakness of the currencies. They purposely drop it in order to induce the traders to become bearish so that the traders think that they can easily do sell and buy trade. Not only small traders, even the institutions, sometimes the money managers and also the fund managers, they also think in similar line whenever all the supports are breached and they just breach all the psychological lower levels and go below, immediately people think that they can dump it in a big way and thereby the market might drop and they can capture the profit out of that in order to compensate the loss they have incurred while holding long positions. So in the process, what happens? They become emotional and all the emotional decisions become wrong. And as a result, they first liquidate the higher level long at the lowest level, incurring a loss, then turn short and later on find that they are trapped and they have to go in for a short covering after the quick rise. So both ways they lose, and it is simple because they acted based on the emotional stress. So any decision which is taken on the influence of emotions will end up wrongly. That is why always the wise people say that be patient and try to find out what are the possibilities. Try to find why it is happening like that. And before finding out the reasons, if you simply look into that of the excuses might look as reasons, but they are all pretensions. They are all basically the false moves the players do in order to trap the traders. In this game, unfortunately, every time the players do this way, and the traders continue to become bullish and bearish alternatively. This is a very unfortunate situation. And if somebody is fooled once or somebody faces a surprise in an event, then subsequently the same events happen, they don't become surprised. They become accustomed to that, and also they understand the trick involved in that, and they don't become trapped. But unfortunately, in trading, the players make the moves in a big way by giving the leverage trading to that of the traders. So that even though the traders are strong minded, they find okay, they are only dropping in order to buy. But when they drop about 500 to 600 pips, when the usable margin reduces because of the leverage trading, then automatically the fear grips in. Even though they know very well the players are going to rise the market, they become helpless. So here, it is not only the emotion, it is a question of the decision making. Envisage the unexpected, or envisage that the market can go against us. In the event, what are the precautions we are going to take? And take the precautions right from the beginning. Prevention is better than cure. So if you try to prevent that, I am not going to incur unlimited loss. What are the methods? You have to take a very less position so that if the market goes against, also the loss will be very less. The second important thing is that in the event if the market goes against me, how I am going to capitalize it? It is a smart way of thinking. When the market goes against me, then obviously my usable margin show drawdown. If I use the hedging, then the hedging will prevent the drawdown and also it will show the profit on the downside when they are making a drop. Then how do I capture it? Because once it is hedged and the market is in the middle level between the buy and the sell, then you should not lose patience. Because most of the wrong decisions are taken by the traders when their patience is tested. So ultimately, it is a 24 hours market. The players need to make up and down moves all 24 hours. So they cannot just like that in 5 minutes take up the market and continue to take up the market in another 5 minutes, continue to take up the market in another 5 minutes. What they are going to do with the rest of the 23 and 45 minutes, 23 hours and 45 minutes. So it is not as you think. They have to trap the traders, and they're simply gaining the lever or simply dropping the lever is not their intentions. Their intention is to make money. How they can make money? Fool the traders. So they are successful in fooling the traders again and again. And I told you what is the secret behind it. They use GBP as a sentiment creator on one side and reverse the sentiment using the USDN. So again, you want more explanations on that. I don't know what I can tell you. So they just drop GBP again and again, breach all the psychological level. It might be even 500 pips drop. It is nothing for them because they drop and buy when the traders are liquidating it. They don't do sell and buy trade. They only just withdraw the support. Automatically the market drops. When the traders sell more and more positions, it drops. And then it induces the traders to take more sell positions, thinking that the market is on the downtrend. And technically the market is also on the downtrend. So they commit more sell positions and the players are the buyers. Then after buying all the sells, they quickly rise like this and induce all the short sellers to go in for an average selling during the rise. Then subsequently, they make further one-sided rise, inducing them to go in for a big short covering for the year end. So ultimately, what is more important is we cannot trade like them because we don't have so much of equity to trade. Billions of dollars we don't have. We have a few thousands of dollars with which we'll be able to earn. So what strategy we have to use it? You cannot simply say that I don't know how to use hedging. It is something like I don't know how to drive the car. I want to hire a person to drive the car. Fine. If you can afford to hire a person to drive the car, then fine. But when you cannot afford, then the only method is you have to learn how to drive the car. So if you develop the rigidity, no, I cannot trade with hedging. that means you are fooling yourself. And in the event of crisis, what you are going to do? You have to think about it. It is something like that. I do not want to learn swimming because I am afraid of water. But in the event, if you are pushed in water, you need to survive. So it is a question of when you, as long as you have got that urge to trade, you need to trade properly. You have to learn the techniques properly. It is not the fundamentals and the technique and the fundamentals and the technicals. And the fundamentals and the technicals are the wrong informations given to that of the traders so that they get easily distracted. When the traders are easily distracted following the fundamentals and the technicals, the players are here to grab the money from that of the traders. And then the common saying says that 95% of the traders lose money in the market. And you find that every technical analyst this year he will be catching hold of Fibonacci retracement. And after about 1 or 2 years, when he is giving the webinars or explaining the technicals, and later on find that the market has gone against, then he will silently switch over to the Bollinger curve and say that no, this is the one which I wanted to use. Then later on, he will say that no, I wanted to follow MACD or I wanted to follow the Elliott's wave. So people are restless. People think that somewhere they will get the solution without understanding none of these things will permanently give a solution to the traders because the players make the moves in the market appear it is following technicals, appears it follows fundamentals, then they simply reverse the market. And GBP was trading around 1.5568 and 5570 area on Friday. Over the weekend, the UK economy has improved tremendously. Can anybody confirm it? And the European economy has gone up. So what happened to the Japanese economy? It went up to 117 and came down to 115. So when you look at this, then you can understand to fool the traders, they are talking about economic fundamentals. And these economic fundamentals cannot change second by second. Any economics will agree to that. The economic conditions of a country cannot change second by second. That is why they do the analysis once a month, or sometimes once a quarter, or sometimes once a year, in order to find how exactly there is an improvement in the economic conditions. There are various parameters to assess the fundamentals of the economic conditions. And so those various parameters are being released every week in a different conditions. That is, this week non-farm payroll, next week about the interest rate decision and the inflation and things like that. They spread over all the economic news, mainly to facilitate the banks to make surprise moves in the market. Why not they announce everything on one day and say, okay, from last month, this month, the economic condition has improved or decreased or whatever it is on such and such date, on every month. Why not they do that? They know very well it has to be used in order to trigger the market. So the market is structured in such a way, thereby it is first of all leveraged so that the traders overtrade. Then secondly, they give the margin call because the margin is a must. And once it exceeds the margin call has to be applied by the platform. Okay, in spite of all those things, the traders try to enter into the market hoping that they will be able to make money. Besides, you find the platform providers make their own stop-ins. So with all the stress, the traders need to survive and earn money. That is why you find 95% of the traders lose money. If somebody says that you enter into the sea, 95% of the traders, 95% of the swimmers will die. Will anybody jump into sea? No. I am very sure nobody will jump into sea. But here in the market, when you say Everybody thinks that, no, I may not be in 95%, I might be in 5%. These are all nothing but the assumptions without understanding whether I am really tested to have the patience, whether I will be able to perceive the market in the right spirit. So those things are not being assessed because there is no assessing and there is no university giving a teaching of these things. And many of the traders, they learn it out of experience, but it becomes a very costly experience and they lose all the money and later on gain all the wisdom. What is the use? Because that is not being used by them. So that is why you find most of the traders who are most of the analysts who are very successful in giving analysis, etc., may not be good traders. So ultimately, you should be a good analyst and also a good trader. For that, you have to keep your method as simple as possible. And you should be able to always envisage, I can go wrong. As long as I am human, I can go wrong. So focus on the trading strategy. I find, unfortunately, throughout the world, no one is teaching about the trading strategies. And everybody is talking about fine tuning the forecast, fine tuning the forecast, fine tuning the forecast. And in that process, they are not fine tuning it at all. And why not they think of, okay, when it is next to impossible to fine tune the forecast, why not you think of, yes, method thereby the traders can avoid the margin call. Traders can avoid the over trading. And many of the people say that trade with stop, simple. Trade with stop. It is very easy to tell others trade with stop. If I am stopped out 2-3 times, and even if God comes and tell me that place stop, I will not place it because I know very well they are stop hunters and they hit the stops just like that when I keep it. So what is the solution then? So if you think about it, then you will find that the derived forecast, market reading, and time to time we have to find out whether we are tracking the market correctly based on the forecast, whether the market is moving or it is going against. By doing the market reading, identifying the type of moves, then you have to go in for the trading strategy. Whether your trading is going is good, still we used the trading strategy to limit the risk and also maximize the profit. Once the position makes profit, we keep stop at entry so that we don't incur any loss and then try to maximize the profit as well. So when I say simply that take very less position and try to earn, then definitely taking only one lot and earning about 10 to 15 pips, person will take years to build up the equity. But if he try to use the method of maximizing the profit, then you will find that every trade will become a profitable trade and maximizing the profit by using it stop at entry, trailing the stop, and also trailing take profit order. As a result, and the going is good, he is able to capture about 100 pips in one single trade. So it is not necessarily that the market has to make one spike for you to make that profit. So if you understand they are making an intentional upward move, can wait for 2 sessions and the start of the third session to maximize 150 pips profit. In that process, what happens? You know that they are making that intentional move. How? Because it is a very slow move happening upward. So when they are making upward intentional move, I'll as well wait for 2 sessions on the start of the third session and try to book profit when the position is making profit, not in a hurry, capturing about 20-30 pips. I know very well they continue to cut the high and still stay above the high. Every 30 minutes they are cutting the new high. So they are making the intentional move. Beyond 2 hours they cut the high. It confirms that it is an intentional move. So that way, if you try to read their intentions, as long as they are human, if you are capable of reading their intentions, then you can really master the market and earn as much as possible for your livelihood. Now, this is the forecast for this week. 17th to 21st of November. It is a third week. So they are expected to make the trending move. Last week, they have been doing the lower level consolidation with the downward stop and in order to gain level till year end and also the first 2 months of the new year. For that, they built up huge buy positions and now they will continue to make an upward intentional move. So in that, they just made upward gap opening and started making the slide. So they will just make a nominal slide towards close. And then later on, they will make a small dip as a week beginning false move during the European session start, and they may not breach that low what they have set. And then they will go up again and then firm up during that of the US session. Then tomorrow they will make a dip during start of the day during Japanese session and start making a quick rise. Then swing and firm up and swing and rise moves are expected tomorrow. And Wednesday also they will make consistent rise. And then Thursday they will make a dip and then rise, then swing and slide during the European session, and then swing and rise during US session. And for the weekend, they will just swing and rise during the Japanese and the European session. And similar to last Friday, they will make a dip during start of the US session and then start making the rise. So the dip, they make it mainly to induce the long holders to shed their long positions and gain the levels to induce the short sellers to book loss. So that the traders buy it from that of the emotional sellers at the lower level and take up the market and give it to that of the emotional short coverers. So that way they give less profit to that of those who are holding long positions. When they make a small dip, they become afraid and liquidate the long position. Then they gain the levels, and at that dip, sometimes those who have taken the lower level sells will also average their sells by taking more sell positions, and weakened when they quickly gain the level later on, the traders will come for a short covering. So every time you come across the distrust trading and the trader will say that, no, my gut feeling was telling that the euro will go up, but technically, it was very weak and it was not able to breach 1.2489. That is how he will be telling. Whom he is telling, God only knows, because he is trying to pacify himself by telling all the explanations. But ultimately, what is more important is earning money from that other market. I'm not criticizing anybody here. Please don't mistake me. I'm just giving the mindset of the people, those who are entering into that of the trading, so that you will be able to understand that we are doing the wrong thing by blaming others in the market. There is no point in blaming others in the market because ultimately we take the decision in trading and we have to capture the profit or accept the loss. So in the process, you reflect on it. Then you will be able to find that what I have been doing it is wrong. So this is very important for us to understand. Only then you will become a successful trader. Now, these are all the levels in which the currencies are expected to trade. So 1.2525 to 1.2875 is the expected range in euro. And so far they have gone up to the 1.2577. Briefly came down to 1.2514. And GBP also 1.5664 is the 5675 to 1.62. And USD yen, as I was telling, that every time they will gain the level and from there they will try to make a drop. And so there is a potency to come down to 113.50. That is why I told every time that don't do sell and buy trade in the case of USD yen. They are known to make one-sided move of this nature. You wait for the drops to happen because we do not know when exactly they are going to drop. And suddenly they will make a drop when the traders have taken huge long positions in Euro yen and JPY yen and other yen crosses. And also in the case of yen, USD yen, and then suddenly make one drop and afterwards simply recover most of the drops. then if you don't book profit, we will be in loss again. That is why I suggested that not to go in for sell and buy trades in the case of the denominator currencies. And USD CHF also, they are expected to make some more dip before making further rise. Then USD CAD, they are expected to make the wide range swings here, 1.1100 to 1.1325 level. It is a higher level consolidation, either way stop and move. And in the case of Australian dollar, lower level consolidation with either way stop ends they are expected to make. And so from 0.87, they are expected to go to 0.90 area. And you know that the commodity pairs lead the rally and lag behind. So it will induce Euro and GBP to go up, and later on it will be watching Euro and GBP going up. It may not participate. So keep that in mind. So don't relate currencies and don't think that when this currency is rising, the other currency should also rise. If you think like that, you might be deprived of the profit. As you see, that GBP is the currency which has made about 48 pips positive net change from that of Friday close when compared to that of Australian dollar 27 pips and Euro 19 pips. So every time they will not continue to gain Euro. Every time they will not continue to gain levels in GBP. They alternate it in order to handle the European crosses and also the crosses with the commodities. So keep that in mind. We have to see the net change to find which currency they are trying to take up more. And you know, GBP is the currency which is used to create the market sentiment. On the downside, they have done it. And so on the upside, they are expected to make it similarly. And that process, you will find Euro Yen, USD Yen, which has come down. And suddenly you might find that when Euro and GBP are rising, USD Yen will also be rising in order to gain quickly the levels in the case of Yen crosses. And again, USD Yen is expected to drop quickly in order to trigger Euro and GBP to spike upward. So keep that in mind. They will make contrarian move using USD Yen and also the USD weakening move alternatively. So if you understand what move they are going to do it each day, then you will find it very easy to trade in the market. Now coming to that of the market reading, Euro has not breached the initial low or the high. GBP has not breached the initial low or the high. As I explained, that they set these initial lows and the highs around 3:15 GMT. Subsequently, they are not breached them in order to reverse the market towards late Japanese session. Just nominally and make a small dip during start of the US European session and then start gaining the levels again after trapping short sellers. Then in the case of yen, 115.46 is the low, 117.06 is the high. They are not breached it. And 95.53 is the low, 96 is the high. They are not breached. And here again, you find USD CAD, they are not breached the low. The high, they have breached it by 1 pip. Australian dollar, 87.47 and 87.96 are the lows and the highs. They are not breached it. So predominantly, they are not breached the levels. And in the case of USD CAD, the spread is less than 40 pips. So they just, it is only 1.1295, not 96. So they are not breached here also. So ultimately, you find that after setting the initial lows and the highs and created the bullish field that of the traders, they are not breached the high in the case of Euro and GBP, not breached the low in the case of USD and CHF. So when the traders think that, okay, it is a good level to buy, then they will make a drop and hit their stops during late Japanese and start of the European session. And when the traders think that, okay, market is going to drop, it was only a dead cat bounce back on the upside, it is going to drop, so it is better to sell after the drop, then again they will gain the levels and induce them to do the short covering. So again and again, the players are here to trap traders. So what is the simple logic in it? After the drop, don't sell. After the rise, don't buy. So if you keep these things as your thumb rule, as your the guidelines for trading, you will not come across surprises in the market. So after doing the market reading, when the market is near that of the high, we take a sell position. Once they set, so around 3:30, when they set the high and not breach the high for 30 minutes, you could have taken a sell and you would have just booked some profit. Similarly here again, 10 to 15 pips. So when the market is near the high, we can take a sell. When the market is near the low, we can take a buy. But still, always expect the unexpected. So keep 30 pips hedge order to limit the risk if the hedging facility is available in the trading platform. Otherwise, use the stop to limit the risk, 30 pips stop. And once the position makes profit, immediately keep stop at entry so that you will not incur any loss. At the same time, when the position is closed, you will be getting another opportunity. The equity will be released for you to take another position. So nothing is lost in that process instead of stopping it out. So quickly keep stop at entry and then try to see that you are able to maximize the profit by using a trailing stop in a profit making position and also trailing take profit order. That way you will be able to consistently earn money from the other market. So for that, the important thing is not only the levels, near whether the market is near the high or near the low, and you have to follow the timings. So the early and the late sessions, they handle that majors, and the mid sessions, they handle the crosses. So make a note of the timings and also note down that they only handle two pairs at a given time. So they make quick moves in two pairs, and once that is over, they take another two pairs and make moves. So sometimes you might find that euro they might take, and euro and yen they might take and make quick moves, and later on you may find that US GBP and CHF might be taken up and they will make the opposite move or the same directional move. So you have to find that what two pairs they are taking it. It can be identified when they make a spread between the high and the low for more than 30 minutes. Normally during the Japanese session, they will handle the yen and Australian dollar because Japan and Australia will be very active during that time. That is why they make more than 40 pips in them and then subsequently make some stop-ins on the upside as well as the downside. Always they will make a false move before starting the intentional move. If you keep it in mind, then you will be able to track it and take positions during such quick moves as a smart trader. So once you find that what time the session starts and when the session gets over, when the early and the late sessions are there, you take a buy position during the early session. Don't try to close it during the mid session. Try to close it during the late session. And if they make a dip and then start gaining the level, late session they will make one more quick gain. At that time, you can book profit. So follow the timings and do it rather than simply looking into the levels alone. So I'll try to answer to the questions which are asked here in the chat window as well as the question answer window. So I'll come back on 24th of November to give the forecast for the next week, Monday. Thursday, I will not be able to present the review of the forecast because I've got some other work. And tomorrow I'll give Tuesday, 8 GMT, tracking the Forex market together, part 1, and 15 GMT, tracking the Forex market together, part 2. The two twin webinar once a month I give, giving more emphasis with regard to the trading strategies. So I will give the forecast for today, or whatever the forecast I have given it, I'll just recollect the forecast for tomorrow and try to take the positions during that of the European and the US sessions and show how exactly they are making profit. But still, I'll use the trading strategy of hedging order to limit the risk. And once the position makes profit, I'll keep stop at entry and also take profit level. I'll estimate and tell you. And what way we estimate those levels, I'll explain. Then it is very easy for you to do the swing trades following these methods. So every week I'm giving the expected market moves free of cost without any constrained in FX trade, and they also record it and display it under the archives of the webinars. So you can just see, okay, today is 17th, Japanese session, okay, between 0030 and 7:30 GMT, there is going to be a rise and then slide in the case of Euro and GBP. So let me plan my trade accordingly. Otherwise, they are going to make a dip during the European session and then firm up. So during the dip, I'll take a buy near the low when the low has not been breached for 30 minutes from the start of the session, and then book profit by end of the session. That way you can take a decision whenever you have time to trade. You just look into those sessions, what sort of moves are expected to happen, and then try to follow it. 90 to 95% of the occasions, you should be able to book profit. Still, use the trading strategy to limit the risk. Okay, Steve, this week forecast, which pair is for which pair? The entire forecast is for the numerator here, Euro and GBP. Euro and GBP are being taken into consideration for the swing and rise and swing and slide moves. The other pairs are expected to make US dollar weakening move and also the contrarian moves. That is, US dollar weakening moves means, so suppose when Euro and GBP are rising, USDN and USD CHF might make a drop. And sometimes when Euro and GBP are rising, you might find USDN and USD CHF also gaining levels. That is called contrarian move, because Euro and GBP will be making the USD weakening move by gaining levels, and USDN and USD CHF will also gain, making USD gaining move. So if you look into that of US dollar index, you will not be able to understand what is happening. Then Monal. When we note the initial highs and the lower on 330 GMT, we stay to which move, such as stop and false move, extended, etc. We always look for the stop ends during early session. That is what tomorrow I am going to explain to you. That is, you watch for 30 minutes from the start of the session, and when they don't breach the low and stay near that of the low, you take a buy position, and then definitely they will show profit. In the event if they make a downward stop end and come above that of the initial low, or make a downward stop and stop cutting it for 10 minutes during the early session, understand it is a stop end. They will not continue to drop. Then you try to take a buy position, you will be able to book profit. Once you become a smart trader, you will be able to identify. First of all, if you want to be a safe trader, then wait for the stop and to get over. That is, let them come down below that of the initial low and come above that of the initial high. Stay for more than 30 minutes. Then you take a buy, you will find the rise. Okay, those type of moves happen multiple times within a session. No, they don't do it that way. So when you take Japanese session, for example, they make a upward stop, and here Japanese session, they have to set around 3:30 GMT, between 2:30 and 3:30 GMT, they have to set the initial lows and the highs. So if you take European session, 8 o'clock, 8 GMT, it starts. Then up to 8:30, you watch. Sometimes they will make a small dip and come above that of the initial low. Sometimes they make a small rise above that of the initial high and come down. Or they go above that of the initial high and stay above. Or go below that of the initial low and stay below for more than 30 minutes. That means they wanted to make a downward extended move or an upward extended move. But if they come down and reverse or go up and reverse in less than 30 minutes, that means it doesn't stop it. Then they wanted to make the opposite move. So a quick upward stop and will lead to that of slow downward move. A quick downward stop and will lead to that of the slow upward move. Always slow moves are intentional moves and quick moves are false moves. So you follow the quick moves. Wait for the market to make the quick moves. and then commit positions, you will find that quickly you will be able to book profit rather than simply taking positions following technicals, and later on when they go in for a stop and you just become confused whether to hold the stop or just remove the stop and how exactly you have to accept the trade. Then move on. The difference. The difference between extended move and the intention move sometimes seen obviously only when it happens, and it is always seen too late. I'm not able to really understand. I think Monal is trying to say that it is very difficult to identify such moves. No, first of all, you come for tomorrow's webinar. At that time, I'll explain all the three type of moves and show how exactly they are going to do it. And you will be able to see exactly they are doing it that way during the webinar time. And then later on, we'll commit positions. Okay, any insight on gold? Gold is expected to make upward trending move till year end. That is why they had done all the extended downward stop losses. Then in how much drop can they make in euro yen? See, estimating the type of drop, etc., as I told you, the quantum of drop, it depends upon the stops or depends upon the traders holding long positions. And technically, it appears that we will be able to estimate, okay, they can drop about 70 pips. And probably you find the Fibonacci retracement can come up to that. But it is not guaranteed, even though we take it on the technical side, because it appears that it can come down, but there is no guarantee that it has to come down. So ultimately, what is going to determine is the pending positions of the traders. If all traders turn long and their stops are, say, 70 pips below, and if the players think that, okay, by making drop of 80 pips, they will be able to really hit the stops and make good money, they will make it. And instead, if all the traders are short sellers and expecting the market to drop 30 pips, they may not even drop 1 pip. They will continue to gain the levels. So ultimately, they are here to trap the traders. So if you think that technically or fundamentally we'll be able to estimate how much drop or how much rise can happen, we are fooling ourselves. With the hope, we stay, and if it does not happen, we just repent. And there is no remedial, it's not a remedial measure, it is only a speculation. Then, may you please explain again mid-session since crosses are moved by majors? Can we not say mid-session involves moves of majors? Yes, they do make the moves in the case of majors, but they don't go above that of the initial high or below that of the initial low during that of the mid sessions. So during the mid sessions, what they may do is they may just gain level in the case of euro, make a slide in the case of GBP, or make a gain in the case of euro GBP and make a small slide in the case of euro. That way they handle the crosses. So when GBP goes up and euro comes down, euro GBP comes down. When euro goes up about 20 pips and USD goes up by 20 pips, it's a contrarian move during mid-session without breaching the high or the low in all. That is how they handle the crosses. You watch the live market code page and then come back with such questions. Because if you ask theoretically, it may appear that the market is making moves away from that of what is being explained, but it is not. Now I have questions in the question answer window. Steve, I explained to you that all these forecasts are for Euro and GBP. So dip and rise means Euro and GBP are expected to make a dip and then rise. How many pips roughly are the swing and slide? Okay, now a swing is the one they are expected to make the move near that of the high, about 23 pips, or near that of the low, about 23 pips. Or sometimes it can be from high to low, low to high. Without breaching the high and the low, when the momentum is good, when the traders have committed more positions between high and the low, they can make swing. Or they can just make about 15 to 23 pips near that of the high, or 15 to 23 pips near that of the low. 15 pips will be the low they will make before the data release, etc. When nobody is committing positions, they will make only about 10 to 15 pips swing. So that is how the swing is. Firm up is about 25 to 30 pips rise. Dip is about 25 to 30 pips slide. Then slide is about 60-65 pips. And the rise is about 60-65 pips. And spike is about 150 pips. Because they are all statistically estimated, and based on that, the firm up and the rise are given. Because I do not want to give exactly 30 pips rise and 40 pips drop, etc. Because it may happen in Euro, may not happen in GBP. It may happen in GBP or may not happen in Euro. So if I give it in the qualitative expression, then you can find out which pair is going to make the move and accordingly take positions. I explained to you how to identify that. Now, if you see Euro, GBP and Australian dollar, the numerators, you find which one is showing the highest positive net change. GBP is showing highest positive net change of 49 pips, followed by the 30 pips in the case of Aussie, 19 pips in the case of Euro. And you know, on Friday, there have been continuously rising levels in the case of Euro and not correspondingly in the case of GBP. Why? Because they wanted to gain levels in the case of Euro GBP at that time. So they came up to 0.80 in the case of Euro GBP. So after coming to 0.80 level, they started making the slide. How the slide is happening? Gaining more levels in the case of GBP, gaining less level in the case of Euro, just opposite to that. Nothing to do with the economic conditions of Europe and UK. So they gain more levels in GBP and they always make one-sided move that way. So if you are caught on the wrong side, you may have to wait for the next week. For that, if you have very less position, then you can afford to wait. This is a simple method of handling trades. So they are expected to gain levels in the case of GBP first, followed by that Australian dollar. Later on, Euro is expected to gain. You watch and find out how exactly they are doing it. Then you will be able to really appreciate that how important it is to watch the live market quote page and also the net changes in relation to that of the GMT time frame. Then lamb. So will yen crosses drop quickly this week or has to drop already happened? Now, as far as yen crosses are concerned, they are expected to make either way moves and the players are expected to focus more on the majors. So yen crosses might do about 75 pips drop and the gains alternatively, depending upon, you have to watch whether they are going to rise or whether they're going to drop. So when they are doing the US dollar weakening move, like Euro and GBP showing positive net change, USDN and USD showing negative net change, that means USD weakening move. You will not come across much of a move in the case of yen crosses. But when they make contrarian move, like drop in the case of Euro, USDN GBP, or rise in the case of Euro, USDN, and GBP, then you will find during such contrarian move, they are going to handle the crosses in a big way. At that time, commit positions will be able to really make profit. Okay, no more questions. So I'll show the slide for the forecast. This week, the market is expected to show the swing and rise moves. This week, that is Euro and GBP are expected to show swing and rise move, followed by that USDN and USD CHF. Also, they are not going to drop correspondingly. They will also make drop and then continue to rise. That is what the trend is explained here. So that also you can go through to understand it. And the commodity pairs are expected to make the wide range swings. They are not going to participate in one-sided rise in the case of Euro and GBP. So when they gain the levels in the case of Euro, GBP, USDN, and Australian USD CHF, you'll find US dollar index may not show the drop. To say that the currencies are gaining levels. So that will lead to enormous confusions to that of the traders. Those who think that US dollar index will really give us the trend of the market. So you know that every time people will talk about, okay, stock market, when it gains, then Euro could gain. Then later on they will find, no. When US dollar index comes down, then Euro rise. Then later on, they will find US dollar index is not dropping, but still euro rises. Oh, no, probably it is stock market which is related to euro. That is how they will just pick up all the excuses and say that they are all scientific rules. It's an unfortunate situation. Okay, so wish you all happy trading. Tomorrow I'll come back and explain to you how exactly the trading has to be done in the market, following the forecast, market reading, and the trading strategy. So ultimately, what I am trying to emphasize is that the forecast is not great. The trading strategy, the market reading is not great. Ultimately, if you want to become a successful trader, your trading strategy has to be great. Unfortunately, none of the analysts are talking about the trading strategies other than using the stop. So try to learn the trading strategy. You'll be able to master the market. So I wish you all happy trading. See you tomorrow.